Traders, welcome back to another price action trading lesson that is going to help us understand how markets move. We're looking at S&P 500 M&A futures, and the structure today started with neutral bias, spike up, spike down. So the first thing I'm going to do is I'm going to locate important key levels, because if this is going to be trading range for the day, I want to understand where the extremes of the trading range are. And the second step is I need to follow the trend line rule, so I'm going to look for channels on the chart. First one played out, and now we have a secondary channel. There are two ways how I can draw the channel. I can basically view it as some consolidation and draw my channel a little bit tighter, something like this, a little bit more recent, a little bit more steep. But I can see that the price action is strongly breaking above the EMA, and it's not really acting as if sellers are present in the market, okay? So if I'm expecting new low to be tested, of course, I need to sell below EMA, and it didn't happen. Prices broke above EMA, which is a sign that the bulls are stronger. So once I see this, okay, it looks like there was overshoot because the downtrend started from this very point right here. Connecting the first few swings will give me a channel like this. So overshoot can generate stronger correction in the opposite direction. So I'm going to draw right now wider channel. And at this point, what do I do? Okay, because I have conflicting variables. I have overshoot that is generating stronger correction in the opposite direction. But at the same time, downtrend should get new low tested. Okay, in a situation like this, I need to remain patient. There is simply no edge I can take advantage of. There are areas on the chart where you cannot go long and short at the same time. So I just need to wait, because I cannot go long because the downtrend may get new low, and I cannot go short because the uptrend is in play due to overshoot. Okay, you can also see that we're going very sideways, very neutral bias. Okay, so I'm just being super patient because both channels look valid. Okay, it looks like we're going back above the EMA. Now, when I'm watching this, it looks like the bullish momentum is going to prevail because we are really not reversing down. So some high low above EMA confirmation would be okay to expect that this uptrend is going to get new high. But there was no high low, market just continued to trend higher. So at this point, what I'm going to do, I'm going to mark breaking extreme. And also what I can do is, let's say, measure this leg and view it as two legs up. So overshoot can reverse the market. That can happen. There is no new extreme due to overshoot because it was oversold area. So as of right now, the bias is still neutral. Okay, so the big bias is neutral. So what I have to do as a trader, price action trader, is mainly focus on most recent structure. So I'm just going to take into consideration the fact that I am in a trading range, so we can pivot upon reaching these extremes, but I need to follow short-term trend line rule in the meantime. Okay, I don't want to sell just yet. There's no good setup, but this was quite significant bullish momentum, and finally we are breaking below EMA. So the sign that the EMA is not holding is telling me that the buyers are no longer in the market. I don't want to look for any wider channel, secondary channel. Well, I'm not going to draw a wider channel like this. This is incorrect because this is the secondary leg for this first channel. You cannot draw a channel for the secondary leg that created new high for the first channel. Otherwise, you would be simply drawing channels indefinitely and the trend line rule would not make sense. Okay, so uptrend break new high. We are reversing down, and now we have reversal pattern. This is the highest high. I'm going to reset the count. First attempt to go long, we broke above this bar high. Market is trending lower, and now second entry long failure. We're going to get a break below this bar right here. So this is a failed second entry long reversal pattern. Okay, reversal pattern. Uptrend played out. We bounce off the key entry point here, off the key level. There is some tail at the bottom, which is not what you want to see. It would have been better had there been no tail. It's a decent failed second entry long, decent setup. It fits price action rules. The downtrend is in play. Market is trending lower. Once again, another small overshoot, another spike down. You can see how nicely the channel fits. So working with these channels, we're able to navigate the market as it is developing. We're followers. We're not really predicting the market. We're following the market. We have to remain objective and disciplined. Now, I still expect new extreme. Okay, this was decent push down. I expect new extreme. So I would like to see second entry short at the EMA. Even though we have some overshoot, the overshoot is tiny. Can I get a second entry short? But the same situation has happened here. We're back above EMA. Okay, this is not what I wanted to see. Back above EMA. So I need to be super patient. I don't want to draw a wider channel just yet because this was such a clean push down. I can adapt if EMA keeps really holding, but we quickly broke below EMA strongly. So this is telling me, okay, it looks like two legs up. Uptrend played with the breaking new high. I was really expecting new low. So this is micro double top count reset. So I have to reset the count, and I'm going to count from the second top. First entry long failure, which would be a lower high. This would be a lower high to expect new low. Problem is, This is full bullish bar and I cannot sell below bullish bar like this. I would need to see nice bearish bar. If you have bearish bar here for the lower high, you can sell. Not on my chart. Can I felt second entry long? I can, but the problem is this felt second entry long. I don't like how it is part of this bar right here. It would have been better had there been one more bullish bar between these two bars, because you can see these bars kind of merge together. The failure is not as significant. There's no good tempting second entry long for those bulls to get trapped. You always prefer to have some one bullish bar here in between to have some nice pullback, but this setup is okay. It is a failed second entry long to test the new low. You're selling a little bit low, but it fits the rules. Once again, not the best setup. It's a little bit too steep, merging together with this bar. But you expect new low, uptrend played out, your back below EMA. You made the scalp, and actually now we have double bottom here, and we have some kilo right here. And if we're going to really zoom out, we can see that it looks like there is some small bullish imbalance. There's so much empty room here, and we're basically not using the bottom kilo at all. We're just stuck at the top part of this trend range. Downtrend, broad break, push to new extreme, almost new low. And this right here is some triple test. Few traders took it. This is not a bad setup to take by any means. It would be better had there been technical new low, so you know you're clear that the downtrend truly played out. I'm marking this mainly for advanced traders. If you're a novice trader, you don't even have to be worried about this trade. But some traders took it. It's not a bad setup. Nice sell at the bottom, nice signal bar. Maybe riding this back to the key entry point, excuse me, to the EMA. High low bad signal bar. Can you take failed second entry short? I'm not a fan of failed second entry short because number one, I can draw a tight channel like this with the breaking new high already. And this failed second entry short is quite big, closing on its very high. You prefer to be buying a little bit lower so you have some room. You know, so not the greatest failed second entry short. Uptrend played out. It's better to be patient. Okay, just going sideways here. The bias is not clear now. We're back above EMA, so I can redraw channel a little bit wider. The reason why we're now a little bit more bullish and we're drawing wider channel now is because there's overall bullish imbalance. You can see there is no bearish reversal working lower. So zoom out to remind what is the big picture. Bullish imbalance in this trend range. We're not heading lower. In fact, every single low is higher and higher, while the highs are pretty much static. This is a bullish imbalance. Now we have high-low confirmation setup. It's basically actually a second entry long. It's second entry long, new high here, first entry long, pullback, second entry long, but it's not fully at the EMA with the body. You're going long right into these highs. It would be better had there been no push all the way to the double top. I don't like it. It's not fully at the EMA. Had there been here, had the setup form here, new high, first entry long, second entry long right here, that's where you want to go long, right after you push above EMA with enough room to scalp before reaching these highs. This one looks great context wise, but not the greatest setup. If you took it, you're reading this correctly. You expect new high, you have a second entry long above EMA. It's not that the setup is wrong, it's just that it didn't form as clean. Break a new high, and actually the push to new high was so significant that even after breaking new high, you have very strong decisive push up, extremely strong. And this can happen. Bullish imbalance actually can create a breakout pullback and some brand new trend. This can happen under imbalances. So we can draw a secondary channel, and we actually have a lot of confirmations here, but we have overshoot. Once again, overbought area, significant bullish depletion, so we can have stronger correction in the opposite direction, which means there's going to be textbook second entry long right here at the EMA. You don't want to take it because market may break the trend line or even reverse. Okay, a visual 2 legs down, and this is a good sign for the bulls. The broader these 2 legs down are, the more it is negating any wider channel like this. This is super broad. This is incorrect. The kilo is holding as a breakout pullback pattern. The market and price action is telling us everything. So what do you expect now? Well, you expect high-low confirmation setup. Okay, because we have a nice broad 2-legged pullback down, 1 leg down here, second leg down here. Push above EMA and a high-low confirmation setup to test the new high would be exactly what we want to see, because your breakout pullback pattern, overshoot played out, broad 2 legs down, there's no reversal, and push above EMA is the bullish resumption. But there was no high-low, no pullback, no nothing. Breaking new high, unfortunately. So nothing here. Yes, breaking new high. So I have to pause looking to go long. And I was quite surprised that the market is not reversing lower. Why are we going higher? Now drawing wider channel this quickly after we just are breaking new high is not what we want to do. Okay, this is a very weak uptrend, so just have to remain patient. At the same time, I don't think I can just sell willy-nilly off of these highs. There is some more resistance being formed. Let's see what can happen. Okay, from downtrend working lower, back above. I mean, now we can really see some resistance here. Definitely a price action reaction here. You know, we have breaking new high. We have a second entry short. Nice bearish bar, second entry short. Definitely some multiple test. And you can see we have some trend range at the top. Now, I personally don't like selling against the overall bias. The bias is very weak though. This is a very weak uptrend because the corrections are so strong. It basically looks like a ranging market just slightly tilted up. Uptrend played out with the breaking new high, so more advanced traders can consider. It's not my cup of tea, set up like this, but every trader has different personality. And you can sell nice bearish bar off of these highs. You know, you can treat it as a trend range, so you are selling off of these highs. You have a lower high, but it's a little bit too big. A lower high here, a little bit too big. Not a bad setup if you took it. I'm gonna redraw downtrend working lower. Downtrend working lower. A lower high here. You can mark it more aggressive, especially if you have a better bar. Break. I want to see second entry short, new low, first entry short, second entry short, test the new extreme. I don't think you can go long because it's not really like a second entry long or nothing. If you took a long here, actually, okay, it didn't trigger, so there's no setup anyway. And now that you have an inside bar, no problem. Uptrend. Oh, it's already 1450, so it's too late to trade anyway, and market is about to close. This is the overall structure for today, start of the week. It was a slow price action. This was apparent right around the open. Market didn't really move that much, low amount of bars. We have quite weak uptrend working higher. Now there are a few good setups, but not that many great super easy ones. So if you are mainly a beginner trader and you didn't really take any setup today, maybe you're sitting on 0 trades, you did pretty good because a lot of these setups, they're good price action wise, but when you're watching this live, they're a little bit more advanced. So it's not that easy to pull the trigger when you're analyzing the chart live. It's quite sideways, the bullish bias is very slight, and there are not that many super great setups. You can make a case for a few more aggressive ones, maybe going along right here. But other than that, fairly slow price action trend day. So if you find yourself trading a day like this, where you can already tell that the market is very, very slow on the ES, it's maybe time to open other instruments and see if price action rules align on other instruments. We talked about this in the past, such as CL, Gold, and NQ, for example. You can definitely watch those on the side because once the main market is so slow, you have a lot of time to think about other trades and other instruments. It may not be a bad idea to watch other instruments here and there to see if everything aligns. You can get some super easy high probability setup on those other instruments. But I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck your trading.